Hello, everyone. I hope you had a lovely Thanksgiving holiday with family and friends. We're going to get it started off the same way that we always do by looking at the SPY, and we're going to take a bigger picture view and then come on down. I want to remind everybody, you're going to see a lot. You got, oh, look at all these indicators. Like, oh, it's so confusing. It's crazy, right? Just to let you know, all I really need is just price and volume. Though that's primary. The moving averages are secondary, support resistance lines are secondary, these are tertiary. However, they can help us with big picture views. And for anybody that thinks that, once again, this is a secular bear market, I'm going to ask you, did you see the Black Friday sales in a so-called so-so recession? There you go. Some of the things that I use to help me gauge where we're at, overall, and it's possible that it turns into a secular bear market next year. The point is, it isn't now. And if using these tertiary indicators, you can see here that shake and money flow. The only time it's been negative going back to 1997 was during a real secular bear market, 2001 to 2003, and then here in 2008. How does it look currently? We're nowhere near crossing below the zero line. So just keep that in mind. Now, at the same time, the TTM, the momentum indicator has gone negative, 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 but still, we're not in complete alignment. And I've always told everybody, if we go to the weekly time frame, once again, our indicators, tertiary, green, green, green. And I've always said on a weekly time frame, I get bearish. Let's see, will it go out? It sure does. I get bearish when we get below the 200, this yellow line, rally back, fail at the 200. That's when I start operating on the short side on a swing basis. Intraday, I'll always try to short. And unfortunately, this past week, I focused more on shorts than longs. So my intraday trading did not go well. It was actually a red week for me. But small losses, we always cut our losses. We keep them small. The small cap day trading accounts are all at all-time highs, including that educational break-even account. So until we see, so intraday is one thing, but on a longer-term swing basis, I need to see us get below the 200 on the weekly, fail the 200 on the weekly. That's when I begin to operate. Where are we at on the 200 with the SPY? You can see we're still above it. We're trending above it. We're trending higher. We are in between the 50 and this 200, so we're sandwiched. But overall, still, for now, a cyclical bear market. On a daily time frame, we are overbought in the short term, especially if you look at the DIA and VTV. VTV, there we go. Okay, so you see this. If you were questioning getting long here or here or here, and now you want to get long, quote, quote, up here, be careful. Now that we've done another V move, thank you algorithms, which is fine, I would be looking for a pullback towards uptrending moving averages. So you have the 50, you have the 100. The 150 is starting to flatten out. The 200 is starting to flatten out. But you got this 21, 150 all uptrending. All of these levels can be support levels moving forward on the VTV if these stocks continue to lead. Now, while I think that there's a pullback, overall, the trend off the lows is good. It's not great. I'm still lacking what I consider, and they're quantified, grade A setups on the canceling side for swings and positions because of the overall market environment and the way the volume profile of this uptrend. And on my personal, what I call volume truncation max green bop signals, I've had 0 grade A signals off the October lows. So I keep all of this in mind, and it tells me how much size should I take on my trades, how much room should I give trades. Now, one of the problems with this current uptrend is there's been a lot of shakeouts on my end, and the only way I know to deal with that is to either take bigger positions, keep those tight stops. Hopefully, funny word. And if I'm right, awesome. And then deal with way more losses than winners. As long as I keep those losers small, hopefully, once again, the winners will take care of the losers. Or I can give them more room to work by sizing down, using proper, rational, logical support levels. And that's what we're doing. But overall with the market, let's take a bigger picture look at everything. Let's add all my support and resistance lines, including Fibonacci retracements. And this is what it really looks like right now. You can see tons of levels above, tons of levels below. Unless we enter QE or the Fed starts buying assets on their balance sheet again, I don't see how we just keep V-ramping. But at the same time, even though we haven't pivoted to QE via the Fed policy, we are slowing down the velocity of rate hikes. It appears that we're only going to do 50 basis points in December. So if that's the norm, that's a slowing down of the 75 basis points. If that is the case, I doubt that we're going to see much lower prices. So another thing I want to remind everybody, heading into 2022, I sold 50% of my long-term positions. I started in the summer and I finished selling them off in November and December when things got really, really, really weird. Inflation was cooking and the Fed was hiking rates, or really indicating that they were going to start hiking rates, which they did in 2022. But the biggest problem became the whole inflation is transitory narrative, called BS a mile away. Did a couple of interviews where I told everybody that I expect the market to pull back in 2022. And I told everybody I'm not sure whenever I made the video, that made these podcasts, but whatever it is, I said when SPY hits 400, I'm going to start buying back in my long-term portfolios. When SPY hits 380, I'm going to buy back more. And if SPY closes below 350 at any point, I'm going to do a 50% load into the long-term portfolios that have 5 to 20-year time horizons. And then if the market keeps selling off, do it again, buy a little bit more at 320, buy a little bit more at 300, buy a little bit more at 280. And by chance, if the SPY ever got to 250, I would be all in, because historically speaking, that's the lowest the market falls. It's 55% outside of 1929, which was an event before the creation of the FOMC, quantitative easing, money printing, et cetera, et cetera. Boy, pretty damn close on that call, huh? Unfortunately, we never got our close below 350. Needed to close. Intraday, we got to 348.11. That is not a close below 350, so that 50% add hasn't come in. The good news is, thought that I wasn't going to get my 350 back here, thought I wasn't going to get my 350 back here, so I piecemealed into some stocks that I liked in my long-term portfolio and posted those for members. Do I think that we're going to come back down to 350? I do not know. I said, and I've told members over and over, that I believe 340, a close right around 340 would be the ultimate bottom. We'll see. I got a game plan either way. You come down, you retest, you go lower. We'll do that 50% add, and then we'll figure out what to do after that. But either way, no matter what, the long-term portfolios will go back to fully invested as soon as we are done with quantitative tightening. We switch to quantitative easing, or I see the Fed start to buy assets on their balance sheet at an expedited manner. So until those two things happen, or I have a capitulation bottom, that's how the long-term stuff goes. Now, for the position trades, we're not lined up. I'm going to get rid of all this. The market needs to be, this is whenever I'm really heavy. See how we're stacked, 200, 150, 150. This is when you push it. This is when I push it. And in 2017, which is the last time that everything has been lined up on my end for overnight swings in the small cap area, this is when I really get nuts. But I got to be honest, guys, my setups that need the VIX under 20, time segment volume on the monthly to be bullish, IWM leading both the QQQ and SPY, those events have not come together since the end of 2017. But despite that, there's been plenty of strong uptrends, and that's why I like to focus on leading stocks. Stocks currently, before the start of 2022, I told members my number one most bullish sector for 2022 was XLV. Looks like I'm going to be a year late. It's going to be my number one sector for 2023. But has that sector held up better than the overall market? Absolutely. Other sectors I was bullish on was XLF and XLE despite the overall market, but we're going to stick with XLV because last week I showed you a whole bunch of solar stocks that were leading, that looked good that I told you to keep an eye on. And I want to go ahead and give you a couple more that I want you guys to keep an eye on. This one's in the biotech space, AMGN. I see a flag forming here. Keep an eye on this one. You'll want to see a nice hammer candle, something similar to what this candle looks like right here. So you want to see this candle with volume off this moving average or this moving average or this moving average for a long entry on AMGN. But this is a leader. I will admit I already have a position in this, but I do notice that it is consolidating, trying to break out. PODD, this is not a biotech stock, but it's another healthcare sector stock. I do not have a position in this one, but I am actively looking for a position in this one, looking for that hammer off the 21, hopefully. But if not, we'll look to see if there is any other setup. Also, ALNY, watching this one. This one has a base on base pattern forming. You could draw a downtrend line. You can draw a downtrend line connecting the recent highs, put a buy stop above here, or wait for an actual close above this level, about the 221 level, before getting long. That's what I'm doing. It's currently in a squeeze. CMF is going the wrong way, but on a weekly time frame, which is what I mainly focus on, everything looks good there. And of course, the leaders, which I've traded both of these, and I have a tough time holding on. NBIX, this is just, it's not clean, guys. I like clean. It's not clean. It's kind of choppy. And VRTX, another one, not clean, choppy. So if you take a position in this one on a breakout, you've got to give yourself room. And I always like rational stop levels. So if you would get long in here, you need to risk to at least this low. If you get long in here, you have to risk to at least this low. If you get long here, same. So at least it's stair stepping higher. And as you can see, we have a proper moving average stack on VRTX. So everything looks good there. So just wanted to show you some biotech stocks. They continue to look good. But overall, once again, let's get back to the way the market looks. SPY. See how it's below its 200? QQQ. See how it's below its 200? IWM. See how it's below its 200? DIA. That's your leader. It's not a sign of really a healthy market. It's more of a sign of, we need to get some alpha somewhere. We need to find some safety. Let's move there. Look at the XLP versus the XLY. Ratio charts are huge to me. So I look at the XLP to XLY. Let's look at the VTV to the IBD 50. Does that look strong? No. How about the Russell 2000 Growth Index? Does that look strong? No. How about those highly speculative technology innovative names in ARK? Does ARK look strong? No. So you got ARK looking like that. You got FFTY looking like this. You got IWO looking like this. You got the QQQ looking like this. You got the XLY looking like that. You got the XLK looking like that. You got the SMH. So as you guys know, it's all about the Dow Jones Industrial Average, healthcare stocks, consumer discretionary stocks. So that continues to be where the focus needs to be moving forward. And I forgot to mention the leader in the biotech space that I have unfortunately not taken a piece in. I saw CPRX kind of make this improper cup with handle. You could call this a low cheat area whenever it closes above. And you can see here, we got back-to-back pocket pivot point signals. We're green here on the CMF, which is something I always like. The weekly's looking good. Everything's looking good. But what happened here on this one is that it broke out, and I didn't think volume was strong enough. So I didn't take a position with this cup with low handle, and it has worked out, and it's grinded higher. And I can see here, if you want to call this now a new cup with handle, you have a breakout here, and it looks good here. And once again, I'll be seeing if this one can pull back to its 21-day EMA. I really like this one. 99 composite, 99 EPS, 99 relative strength. Take a look at some stocks that are doing well for us just so you guys can see. MTN, this is what it looked like when we got the long signal. Notice the volume surge in the middle window pane, and you can see MTN off the lows. Was it a perfect signal? No. It's what I would call a grade B signal. 25% gain. Just wanted to show you guys what it looked like. CECO, here's another stock that we're still long, hitting new highs. This is what it looks like off this 50. This is what we consider a grade A speculative quality signal. right off the 50, right through the 200, still trending higher. This move right here, III, but still, on an end-of-day basis, we have a 99% gain since the entry. Wanted to show you what that looked like. IIPR off the low. So once again, that volume surge. Look at what the volume does in the middle window pane. That balance of power indicator off the low. They don't always work. When they don't work, we cut our losses. When they do work, another 25% gain. BELFB, this one was canned some quality, also in my perfect speculator scan. This is the signal. You got a nice candle over candle on heavier volume with the pocket pivot point signal right off the 50. We eventually got long reversal, never closed below this low. Good to go, 39% gain. AEHR, we got this long signal. We got a great ad signal that I did not take, and I tell you what, boom, boom, boom. See that? Boom, boom, right there. Ad signal. Did not add to it. Should have. That being said, all is well. 67% gain in AEHR. This is a leader. FSLR, we all know this is a leader. Why did I get long? Volume break above the cup pattern with balance of power confirmation. Wish it was a cleaner cup, but it's still a pretty clean cup overall. Still, I wish it was better, but we don't have that market for that. ELF, I'm going to show you what ELF looked like when we went long. Bam. This was the signal right here. We had the gap up off earnings. Nice follow through. Got long. Perfect. Acting stock since getting long, 38%. And then the last one I want to show everybody, remember, this is how you want them to work. They don't always work like this, but when they don't, you cut your losses. This was a signal in the INGR. You can see the hammer candle, the volume surge, growing increase of balance and power, confirmed in other signals. Gapped up on me, so no fill on this day, right? I want to get long at 81.87. Comes back down below the price. I don't let it fill unless it trades up and above my level. Does so on this day, and since then has never looked back. INGR is a nice little mover. So just wanted to show everybody. Got quite a few winners out there, but nothing explosive. No grade A setups, grade B setups, and overall, the market is weird, but it is uptrending. And I would expect more chop as we head into the end of the year with a Q4 bias. On that note, we did enter those quarterly portfolio names, and we are holding them for 90 days on my end, so we will see how that does. Those portfolios continue to do well. But I'm going to wrap it up here. Have a wonderful rest of your weekend, and I'll see you next weekend. Aloha.